A bit of a back test for Asian session, kind of a first one for me. And this is what we have. So actually upon the open of the daily time frame for Asia today, what we did in fact see was you opened up, you had a bottom wick, price action started to push up. You're trying to identify range. Now, Asian is kind of known for just range. You're not really going to get a set direction straight throughout the day, straight through the open. You need some form of narrative been built in the time frame. So this is why I always typically find that Asian's a little bit more challenging. It's a little bit more slow pace. However, this is the situation that we found ourselves in. So obviously, the ranges that we currently have are a little bit choppy. It doesn't really make too much sense to me to take pretty much anything right now. However, if you start looking to build narrative across the time frames, well, what do you start to see? Well, you start to see, okay, you've got range playing on your hour time frame. You've got previous respect of specific supports in this area, and price action here on the hour is giving you some form of fake out. So if we just put some lines up on the charts, you'll be able to see, okay, you've got a tiny range that can actually be played out here, and if you wait for what your hour does, we've typically seen this behavior in price action before. Price action gives you an inverse hammer, price action fills that hammer. If you give no bottom wick closure on a bearish candle closure, you're typically indicating a higher probability for buyers back up in the range. So if we can couple that with building narrative across the lower time frames, you have the 30, you've got the 15, you've got the 5, price action starts to make a little bit of sense. You've got the 30 that shows exactly the same thing. You're expecting a little bit of lows to get created to your most recent liquidity area for your range play. And that brings you to the hour candle open. So if you look at what price action has done, you wouldn't necessarily find it interesting to open up and start taking buys off of the hour time frame open on 5 a.m. because you don't know if this is actually going to make sense, because price action has, well, first off, closed you below the range, but secondly, hasn't given you a proper respect that tells you, okay, price action is closed up within the range, which is your current range, already validated liquidity, have the mirror on price action, and build the narrative. So now you've got all of those things once price action comes up. Your 15-minute candle open for 5:15, the first candle open on the 15, gives you a confirmation by breaking those lows. So now if you look at the entire checklist, range was identified from the previous price action of data, which is here. This is all previous price action. This is the range that you're currently in. The liquidity range for the range play was here and swept around the hour candle open, which, as you can see, this is exactly how it played out. This was your closure of the candle, price action swept it, and then started preparing you up for the range play. And then the mirror for the left of the side of the range, the 1 hour close with no bottom wick, bearish, meaning the range plays up, have a higher probability, and the lows were broken on the 5:15 candle open, indicating buys are validated. It's a good trade, textbook method, mirrored price action. So we had the targets, we had the stop loss. Stop loss goes below the current range low, below the current 1 hour low, because the next time you break that, you're most likely going to see price action create bearish structure to continue the range down, and you don't really want to be holding that. You had a gap up in the morning, price action already filled the bottom wick, so you're expecting price to do whatever it needs to do, but we want to keep the risk quite aggressively during Asian session, because you know that typically you won't get many drives out of a breakout into a specific direction. There's not a really high volatility area in Asian session, therefore this play is relatively safe. So price action gets you in, you're looking at some form of entry at this area, whether that be the bottom wick and the rebreak of the highs. Either way, you've got a validation of price action, so you're looking to get validated into this trade right here. A matter of fact, if we just break down the 1 minute time frame, you would have gotten into an entry somewhere around this area here on the open, probably right here. When you get that candle closure, you're looking for an entry in here at 5:17. Price action takes you up, and this is a plus 98 pip trade for a risk of 50. That is a 1.93 risk to reward, and it actually meets all of my requirements. And actually today's potential trade opportunity that I had, I missed. This isn't Asian, this is actually later on. I missed it because of feeling. It wasn't because of the checklist not being followed. The checklist was, everything was validated. But I didn't execute the trade because I wasn't so sure on whether I should be taking it or not. I had the uncertainty of price action, but that is what trading is. You've got to make sure you're following your rules and not having any form of external factors, which external factors mean your trading psychology, means your emotions. So for me, it's not a fantastic day because I missed out on trading opportunity. But either way, there's the backtesting session. We're still trying to gain as much value out of today as possible by trying our best to develop the skill set. And that is that, really. So this is the Asia session backtesting opportunity, and we're on to tomorrow.